We have quite challenging environments between COVID, semiconductor supply, the war in Ukraine. So actually, yes, we are happy with the resilience we could show. We are organizing well. We're trying to make the best out of this difficult scenario. So I'm quite happy with the results we achieved in the first quarter.
When it comes to the geopolitical changes, we are clearly seeing a lot of changes also in the power setup. So how concerned are you that we are actually scaling down on globalization and that we do see a block building across the world?
Actually, that's a big concern for us because we are an industry, and I think that accounts for the whole industry, which is depending on really open markets to earn the economies of scale worldwide, to be present worldwide, also to balance economies for our, let's say, success. So a closing world, I think, would not only be bad for us as a company, but for the world, because we will lose a growth potential, innovation potential. So those scenarios are really not the best ones for the world. So I would really ask all political leaders and all influential people, keep the world open, keep markets open. That's good for all of us, yeah? And sit down and try to settle and find ways to solve problems again in negotiations and not in war.
Some analysts do think that China could be a problem for Volkswagen this year. So how is the market going, and how are those political sort of repercussions inside China affecting your business and also perhaps the outlook?
Yeah, we had also in China quite a good start in the year. Our electric car sales are really picking up. Now we could fourfold our sales. We sold about 30,000 EVs, which is 4 times more than last year. So also the new electric cars are really coming along well. And we see some improvements now through the COVID situations. All our plants are running again, also on low level, and hopefully towards end of May we should see an improvement in the overall situation in China as well. China remains a very important region for us. We are very strong there. We keep on investing. It's a lot of growth potential for us, and it will be a very innovative market when it comes to EVs, connected cars, autonomous driving. So we won't give up on China, so we will remain there. But we are also trying to improve our footprint in other regions. We are committed to really heavily invest in the United States. We have a lot of growth potential there. We just introduced the ID. Buzz in the United States, and it was very, very well received by public and media. We have a good momentum with our EV cars. We are starting production of our first EVs in the United States later this year, with the ID.4 being produced in Chattanooga. So we are committed to invest more to drive up our market share, which is currently around 4% to 10% within this decade, which is a challenging target, but it's also to balance our global footprint more.